Right now, I'm waiting for Mr. Sam Wainaina to guide us through. Habari gani
Niko salama bwana. How are you?
I'm doing very well, sir. How are you doing?
Thank you. Happy to see you after many days.
Very true. So without wasting time, I just want us to take it away. Wakenya wanataka kujua what is okay, what do you do? Can you introduce yourself?
Okay, thank you very much. My name is Sam Wainaina. I'm a financial advisor with Old Mutual UAP Group. And I have an experience of 19 years now. I take people through investments, insurances, and make sure that they are very well covered and prepared for life ahead of them financially. Basically, from their incomes, what they need to do with money now to have a very good tomorrow. I think in a brief, that is it.
Okay, thank you very much. So today's topic is about insurance. I know it's a very broad topic.
Yes.
Can you hear me? Yes. So I just wanted us to have a breakdown of what insurance is and how does it work. So why do I need an insurance?
Insurance is very important as an asset protection or as an estate maker. Asset protection is where you have a car and in case of an accident, it may be written off. And that would mean that you don't have money to buy a new car. So insurance comes in to replace your car or your house or your factory. And on the other side, you have life insurance, which allows you to create an estate which you don't have on behalf of your family in case of death or disability.
Okay.
Yes.
So with you said you work with the All Mutual, right?
Yes.
So if I may ask, how many policy holders does the insurance have?
There are many. There are just too many. You cannot be able to give a specific number, but given by the number that we put in year out, and given the various aspects of the insurances, this is such a huge number. It's big.
Okay. So
Yes.
I'd like you to take us through this education policy. And before you go ahead, I want us to understand the difference between a policy and a cover.
I think a policy and a cover, they are usually used interchangeably and they mean one and the same thing. That you are covered and the policy is the same as the cover. So ideally, it is one word. It's just like the way we talk of insurance and assurance. They are used interchangeably, but they almost one and the same thing.
Okay.
Yes.
Go ahead.
Yes, you wanted me to say something about education policies, but I wanted to step back and try to demarcate the two different types of insurances for the better understanding of our listener. Number one, we have what we call life insurance. Life insurance is what we call a contract of benefit, and you can buy as many policies as possible. You can have today a cover with company A, you buy 10 million cover. In 5 years' time, you can buy from company B a 20 million cover, and that means you are covered for that million from both companies. That is a life cover. Now, when you go to general insurance, we talk of the contract of benefit, because this is where you cover your car that has a given price tag. Your cover is valued for 2 million bob. And in case of loss, that's what the insurance should be able to compensate you with. You cannot cover your car with company A 2 million and company B 2 million, and then you expect when a loss happens, you come and get 2 million from company A and 2 million from company B. No, they will come together and compensate a total of 2 million to you. That's a contract of indemnity.
Okay.
Yes. Now,
go ahead.
To go to the specific education cover you asked about, it has three main components, but a number of benefits. Number one, an education policy is a saving scheme. It allows you to be able to handle a future financial obligation. You know, the education of your child will cost you, say, 1 million, Bob, and you don't have that 1 million now. What you need to do is, over time, you take the policy and you commit yourself to pay, say, 15,000 per month. So in the number of months you have, say, in 10 years, you will have been able to save the amount of money that you wanted to save. So education policy is a contract of that assists you to save. And number two, the second main aspect of it is that every time you give us your money, we invest it such that the total money you get back is the return, the total savings you make, and the return on that money over the period of time. The third and the most important is that it has an insurance on death and disability. And the insurance is on number one, what we said, the savings. So if you're saving, say, 15,000 per month, in case of your death, in the period that you are supposed to save, the company comes in and continues to pay for you. Say the contract is 10 years time, you die in the second year, we shall pay for you from that point to the 10th year. So that is what we call the three main benefits of an education policy. You have the savings, you have the investment, and you have the insurance. Three.
Mm-hmm.
Yes. Now, yes, sorry.
Go ahead.
What happens with education policies? It is for you to assist us with what you want. Say you have a 2-year-old son, for example, and you want us to, you do want a scheme that assists you to take the kid to high school and university. We shall look at the period between 2 years, the age of the child, and when the child goes, say, to Form 1, and we shall give you now a cover that runs from 2 years to, say, 14 years. After that, you find that now from Form 1, we are supposed to give you money to you. You have finished the accumulation period. We come to the point of now paying you, what we call the payout phase. We shall give you that money from maybe year 1 to year 4. If you wanted us to be able to assist you to pay for high school, or if it also included university, we go from year 1 in high school and up to year 4, and then year 1 in university up to year 4. Yes.
Okay, I can see one, Mr. Wadome Isaac.
Yes.
How are you doing?
Very fine, and you?
I'm doing awesome. Sorry,
I'm late.
I thought you ran away.
No. Siwezi.
Just introduce.
Hi, Bwana Sam, Wainena.
Wainena is very well. Wadome Isaac, karibu sana.
Asante.
Yes.
Just introduce yourself, Mr. Home.
My name is Isaac Wadome. I do insurance. I run an agency called Isaac Wadome Insurance Agency, and I'm glad to joining you in this forum discussing insurance. Thank you.
How long have you been in business?
10 years, more than 10 years or 10 years, yes.
Okay.
10 years, yes. This is my 10th year.
Sasa karibu. Mr. Wainaina was taking us through an education policy. So let's listen to him. Bwana Wainaina?
Yes.
Go ahead, sir.
Okay, I just mentioned earlier on in a summary form now that the education policy will have a savings an investment component and an insurance component. And we also come in to see at what phase do you want the education policy to assist you to pay for school of the child. So between the age of the child and when you want to use the education policy, that will be the term of the cover. And then we come and pay you out your money for the period of time that you had selected at the point of beginning the education policy. Yes.
Mr. Wanaina, I want us to work with figures. Let's say I'm taking an education policy of 10 years and I'm paying 10,000 per month.
Yes.
At the end of the day, how much am I going to get?
Okay. Let me come back to the insurance element of the education policy for you to able to have a grasp of the matter. Now, when you talk of an insurance, you're talking of taking a risk. And in taking the risk, first of all, we have to consider the age, the gender, the occupation, and the hazardous activity of the person who is a contracting party or the owner of the contract. So you find that sometimes when you are young, the figures are more favorable to you than somebody who is a little bit older than, say, if you start at 25 years or 30 years, and somebody starts at 40 or 45, the figure for the one with 40 or 45 will be a little bit less because the risk is also high. Number two, gender. Gender also comes into play. You find that ladies get to be having an easier time in insurance. I think they're able to handle the stresses of life. So the figures will be slightly better. So I'm not going to give you a blanket answer, Mr. Host, for now, because it will vary from whether you are young or old, or you smoke or you drink, and all those factors will come into play in the figures we are going to give you. So it is specific to the person at whatever point in time.
Okay.
But irrespective of that fact, there will be some money coming to you over and above what you have saved. The point is, if you save, say, 1.2 million in 10 years, you will not get 1.2 million back. You probably get 1.6 or 1.5 or 1.8, dependent on all those other factors that come into play.
Okay, Mr. Isaac. Why do you think insurance is important to us?
Insurance is important to all of us. One, just like in life, when you're planning a journey from Nairobi to Mombasa, Mombasa to Nairobi, or Nairobi to Kisumu, you plan. If you're driving your own car, you need to check whether you've serviced your car. You need to check whether you have a spare tire. The same with life. That's why insurance comes in. It's like it's more like a spare wheel, just in case on the road you get a flat. There is this uncertainty that happens. Insurance will come in handy to take care of the uncertainty that you're facing. So that's the reason why you should have insurance. Not look at it more as a protection. You need it more as a protection for you to take care of the uncertainty in life.
I wanted to talk briefly about if I have a car and I want to insure, what are the procedures?
One, do you have a logbook, valid logbook? Logbook 1, 2, ID, KRA PIN, driver's license. These are KYCs for you to get the cover. And plus completing the application. So basically, for motor insurance, with the current issues of terrorism and everything, they've come up with the KYCs. You must bring all those documents for you to get your motor insurance. So you must have 1, logbook; 2, driver's license, ID, and KRA pin. Then you complete the application form, knowing what type of cover you want. There is third party, comprehensive. There is a PSV cover. What type of cover do you want? Is it commercial cover you want? So you must know exactly what you want, but the KYCs that you'll be asked for, it's across the board. It will apply in all the covers.
Great. Back to you, Mr. Wainaina.
Yes.
Let's say I've been contributing, and from nowhere, maybe I got ill and things happened. What will happen to my cover?
Is it an assumption that you are ill and you cannot be able to continue to pay?
Yes.
Okay. Number one, the current policies we have are very good. They are able to assist you to take what you call a premium holiday, such that if you're not able to pay from now, we give you a holiday for 6 months. I'm very sure by 6 months, if it is not a bad situation, you'll be able to have come back and continued with your cover. In the unlikely event or rare event that you are not able to pay completely, you are able to convert that policy from being an active policy to a paid-up policy. A paid-up policy reduces the sum assured, but also reduces what you anticipate to get at the end. But it doesn't give you any more financial obligation to be able to pay for the remaining period of time. So you have options.
Mr. Wahome, I don't know if you're familiar with medical cover, so ningependa utuelezee some brief about medical cover. Yes.
Yes. I'm familiar with all the covers.
Please go ahead.
Medical covers. There is inpatient, outpatient, and then there are optional benefits. Some covers offer optional benefits like dental and optical, and in some instances, it's inbuilt in the cover. It's usually inbuilt. You take, you don't pay for it separately. That's why I'm saying it's inbuilt. And in some covers, it's optional. You can decide to pay for it or not, depending on whether you want to use it. Basically, the scope of cover is when you need to go to hospital. For inpatient, it covers for admissions, and then also you can get covered for day surgeries. The scope is wide. It can offer cover when in Kenya, in terms of geographic, and also outside Kenya, depending on the type of cover that you've taken. And it can also cover for medication outside the country. Let's say you want to go for treatment in India or South Africa or Germany. So different type of cover give different types of benefit. For inpatient, is usually mandatory for you to take it. Outpatient, it's optional. Then in some covers where the dental and optical and maternity, they're not inbuilt, you might find it you need to pay for it separately. So if you need to pay for it separately, you find that you must have outpatient for you to take dental, optical, or maternity. But inpatient, it's mandatory.
So does the medical cover do cover the COVID?
For now, no. It's being considered as a pandemic, and most insurance companies have shied away from covering COVID. But for individual, it has not been covered. But for corporates, it's being covered, but only for hospitals that are working hand in hand with the government. Like you'll find Kenyatta National Hospital, Bagathi. So yeah.
So if I want to have if I want to have a medical cover, then I come to you. What advice will I get, or how will I go about it?
It depends with the needs.
Okay.
It depends with the needs because different covers offer different needs. Like there is what insurance A is offering, insurance B is not offering. So it depends with the kind of need that you have. So that's why I'll start advising you based on the needs that you have. Because if your need is this and then insurance A is not offering, then I'll advise you to for insurance B, where your need will be catered for.
Do you have any information about NHIF and how does it work?
For NHIF, okay, not much information, but when it comes to insurance, is usually
Yes.
we for inpatient we pay up to the NHIF rebate. It's like we are doing a cost sharing, but now most covers it's like there are some covers that are saying even if you don't have NHIF, we won't ask you to pay the on top amount of money where in a case where you've been admitted.
So if I'm coming to you, which kind of insurance are you giving me? Because I'm pretty sure that one will be private, right?
Yes. For NHIF is government. I would advise you also to have NHIF, not only the private, the one that I'm offering. I'll also advise you to have NHIF because there's some, like in some cases, you'll find there's some covers that won't cover for when you're going to hospital. The insurance will tell you this type of medication or this type of treatment is being covered under NHIF. So they would throw the burden to NHIF to pay for it. But it's not all. It depends. There's some insurance that will do that.
Thank you very much, Mr. Wainaina. I don't know if you can read that from Mr. Luhale or Mwami. Mr. Mwami is asking what strategies have insurance placed to cater for all people?
Okay, I think the most important is the question of pricing and trying to make a basket of products. Nowadays, you can find very, very affordable products in the marketplace, sometimes ranging into hundreds of shillings to maybe a couple of thousands. And you find that the population bracket is able to be included in the particular kind of a product that you wish to purchase. Number two, you find that there are products now that are even targeting groups. You can have a product which you can be able to buy as a chama. Previously we never had those kind of products. You can buy very simple premiums on an annual basis or monthly basis, and you find that all your chama members are covered. Again, the footprints in terms of location of the branches. In Kenya, we have almost every other corner of the country with an insurance company. And we have actually even gone online. So you can purchase and claim your whatever benefit through an online channel. So we are there, and they have done extremely well.
Thank you very much. I just wanted to add something on medical policy, Mr. Wainaina. Medical cover.
I just want to say it is extremely important to have a medical cover. It is extremely important as a family man, as a young man, as an old man. I mean, at whatever point in time, it is very, very important to have a medical cover. You cannot be able to amplify more the importance of a medical cover. This simply being, when something happens in your family, say you have an accident and you are admitted in a hospital, you find that the major hospitals we have in Kenya, first of all, before they even receive your patient, they ask for a deposit of like 200,000, 300,000, or 400,000. Where do you get that kind of money? Surely, you need to just go and unleash that one particular card, and they admit you immediately. Number two, even if you're able to afford the 200 or the 300 or the 400,000, that money out from your pocket. That is money that has gone out. You need to have used that money to create asset pillar. Taken literally, your financial house should be like a house with many pillars, such that even if one was to go down, the house will still be able to remain. So this money that has gone would have been used elsewhere to be able to assist you and your family for the many financial obligations you find yourself encountering in the course of life. The cost of education, the cost of a good house. I mean, they are innumerable. You can count many reasons why we need the money with us, other than the money going away. And again, when you consider the cost of a cover, you find that as somebody between 20 and 30 years, for 1 million inpatient cover, it will cost you in the range of 18,000 to 25,000. It is extremely manageable. Again, the question of pricing, So these are things that come into play. As Isaac mentioned earlier on, they come to help you to have a nice journey in the course of life. So they are meant to assist you to handle the eventualities that can be able to come in. Thank you.
All right, Mr. Wadome.
Mhm.
Can you hear me?
Yes, I can hear you.
Do you have scenarios where benefits are not paid? And if we do have, how do we go about it?
That one we can handle on a case basis. There are instances where the hospital bill, the insurance can say they won't take up the bill. One being, it was the condition when you are coming on board. Was the condition treated as pre-existing? So if it's a pre-existing condition, have you finished the waiting period? So you see, if you are claiming for a pre-existing condition, yet the waiting period is not yet over, you see, the claim will not be taken up by the insurance. So you need to understand, if I'm taking this cover, I have this condition. Will this condition be covered immediately? Yes or no? If no, then have it in mind that in case you'll be launching a claim for that particular condition, then the insurance might not take up the paying up the bill.
And what will be the waiting period?
In a case, I'm sure it will not happen in a case where the condition is payable. So is it payable? Yes. If it's payable, they will pay. But if it's not payable because it's a pre-existing condition and the waiting period is not over, so in that case, you'll find the bill not being paid.
Can you be able to give us like a specific waiting time before you get to your benefits or your
Like,
whatever?
we can talk of maternity has a waiting period of 1 year. That's across the board.
Okay.
Or even in some insurance, they'll say 11 months waiting period. So assuming I want to go and claim for maternity and I've not finished the 1 year waiting period, so the insurance will not undertake paying the claim for maternity until the waiting period is over.
All right, Mr. Wainaina.
Yes.
Can you hear me, sir? I want us to
Yes, I can
do
hear you.
it practically. I want us to handle this practically. Let's say I have child A who is in class 1. And maybe child A is 7 years. So this child A, 7 years in class 1, I want to take an education policy for this child.
Yes.
I came to you. Then I told you I have a child A, 7 years. I want education policy for this child. How will I go about it? I want us to do it practically with figures and the duration, so that we can be all of us can be on page to see how much is needed and how much am I going to receive back after the end of the policy.
Okay, I think that would I would request some time out for me to do a quotation, but just before you give me that chance, and I project what we can be able to have is the fact that if the child is 7 years, it is most likely the child will be in Form 1 at the age of 14 or 15. So the term of the cover at this point in time would be the difference between 14 or 15 and the current age of the child, which is 7. So if you take 15 years minus 7, that would be a term of 80 years. Number
8 years,
two,
correct.
what we also need to agree on with you, prospective client, is what is your budget? Are you willing to put 3,000
Let's say
or
my budget.
5,000?
Let's work with 5,000.
A budget of 5,000.
Yes.
Okay, fine. And having said this, then I can be able to do a quote, but this would request I would request I get out briefly and then I come back with the figures.
You want to say something, Mr. Wahome?
I would advise we deal with a case by case basis. Whoever wants a quotation, they can just check the details and then probably from there, because I'm sure he will need date of birth, the name of the child,
yes.
Parent, and date of birth of the parent, and both of parent and the child. So in that case, it will also take time in terms of doing the quotation. So I would suggest that whoever needs a quotation, they can just
because the reason why I said this,
you take contact or you can just inbox separately with the whichever they want.
Do you know, I wanted to have this kind of figure so that at least, a lot of Kenyans don't know how to go about it. And if I say that I give a chance for them to come to your inbox, then if we cannot come to your inbox, all of us, you get. So that's why I wanted to have a scenario where we have we have child A is 7 years, the name of the child is child A, and the age is 7 years. The budget is 5,000. So basically, from there, you can be able to gauge or to do the calculation depending, because I'm pretty sure you're very much experienced on this. So we can get a rough idea of how much.
It's true, because why I'm saying that is you'll find personally I would like my child to go to you'll find my preference of where I want to take my child and the preference of the another parents wanting to take the child to for education is different. So it's usually based on what kind of dream do you have, because the dream that dream that parent A has and the dream that parent B have, they're very different. So now that they are very different, they are worth different. You'll pay for them different in terms of costing. They're different. So in such a case, you cannot use a scenario of parent A to explain to parent B how it works. That's why I'm suggesting that. But it's okay.
Mr.
It's okay.
We are dealing with this parent A. I'm here, parent A. Let's forget about parent B.
No, you are right.
Go ahead, Sam.
You are right. Both of you are very right, because sometimes there are these details that you cannot be able to give online, like what is the age, your age or your specific date of birth now, because it will come in handy in the quotation system. Number two, the education you want for your child. Do you want the current 844 system of education, or the new Matiang'i one, the CBC, or are we taking your child to the high cost international schools? You understand? I think that's why you fight with the suggestion. But still, we can be able to do a quote, and we can be able to share the figures. But if you allow me, and as I prepare to come to the question of the figures, I wanted to take ourselves back just a little bit to life covers, because there's something that the education policy, we said it has savings, it has investment, and it has the insurance. Now, if you die in the course of the term, say the 10 years, we shall pay for you for the remaining term. You see, there's nothing that comes to the parent or to children who have been left behind immediately, and that's why the life cover is more important to be combined with any other of these insurances we are talking about. Now, a life cover pays immediately on death, and education does not pay. So you need to know that the cost of education, children have so many other needs in the course of life. They need to clothe, they need to eat, they need to be paid for, DSTV and the like, and this can be sorted by the life cover. I appreciate what I've seen the life covers do to families who their breadwinner have passed on. Having said that, I can take some time out and then I come with the figures shortly.
Sure. Probably if you can take a maximum of maybe 5 minutes, because we're also trying to beat on time.
Yes.
Yes. Sure. Mr. Wahome.
Yes.
Okay. I'm pretty much, I think I was told you do much with the education policy, mambo na magari. So I have a question on this education policy and everything. Do you have any discounts on premiums, those who pay yearly and those who pay like monthly?
Sorry.
Do you have any discounts on premiums, like for those who pay yearly and those who pay monthly? Like for example, kuna watu wanalipia a whole year na kuna wale wanalipia monthly. Do you have any discounts for those who pay year?
For motor insurance, there is no. It's usually an annual cover where you can decide to. Insurance gives you it's like a benefit of paying in installments. So you can pay in 3 installments, depending with which insurance you are dealing with. There's some that will ask for 2 installments, depending on with which type of insurance that you're dealing with or who your insurance is. So basically, there is you cannot pay like for every month you pay for insurance, but you're being offered a benefit of paying installments when you're taking up motor insurance. For medical, you can do premium finance. Also for motor insurance, you can also do premium finance, where you pay like certain, maybe 20%, you pay at 20% to the insurance, then the other 80% you seek premium financing. Whether if the insurance provides premium finance, well and good, and if it doesn't, you approach a bank where they offer you premium financing, of which you'll pay your normal premium with an additional amount of money, which is called the interest. Now, just because
I've seen Mr. Mwami here and Auliza answer his question was not responded to well, so I don't know if you can take that question. He's saying my question wasn't concentrically responded to. Considering people have different capacity in resources, how has Mama Mboga catered on the insurance considering she's low income earner?
There is insurance for everyone. There is insurance for everyone. Medical covers, you will find that there are medical covers like the one looking at the app market, taking care of the app market, and there is insurance also for the people who feel like this is where I don't want to say to use the low income earners. They are not low income earners. Okay, I don't want to use the term low income earners because there is insurance for everyone. If it's medical, there is insurance for everyone. Whether you want, depending on your budget. That's why when I was telling you, I was saying using the word, what's your budget? There is insurance for everyone. Now, also, you need also to look at what benefits am I getting. So that's where the difference comes in.
Previously, you talked about the premium cover, comprehensive cover. For someone who doesn't understand what you're talking about, what is it? What are you talking about when you talk about comprehensive cover?
Comprehensive cover covers you. It gives you a comprehensive cover in terms of when you're on the road. It covers your car and the other person that's using the other road users, covering your car and the other road users. So in case of a claim, you will be your car will be paid for the damages that have been put on your car, and the next person will be paid. When it comes to that, but it only covers the other road users, but not your car. So in this case, you'll find yourself getting into your pocket to pay for the damages incurred.
Mr. Wainaina, welcome back.
That's the difference between third party and comprehensive. Third party is only covers the other person. Sorry.
Okay, thank you, host. And before I share the figures I have here, I just want to add on what Isaac was talking about, the comprehensive and the third party. And I want to say that you, the owner of the car, even in that comprehensive insurance, you are not covered. Please note, you, the owner of your car. So even in a comprehensive case, you find that we are going to pay for the damage of the car, your car that is. You're going to pay for the damage of the other car and maybe even beyond that. But your injuries are not covered. And that is why I request my clients most of the time, when you buy an insurance for the car, please also include a personal accident. It's very, very, very important. And maybe Isaac will take some time later to tell us what is a personal accident. Now, to come back to my assignment, I assumed, Mr. Host, that you are a 1983 born, a man, and your child is 2013, also a son, so he's a boy, and you are doing 5,000 per month.
Okay.
You go for 8 years. So you contribute a total of for 5,000 per month for 8 years. So you pay a total contribution of 480,000. And as from year 1 to year 4 of high school, we shall be giving you a total.
Year
1 to year 4. That is from 1 to from 4. 153,432.
153,000.
Yeah, 432 on top. Yes.
Okay.
Yeah. So
go ahead.
So you'll be receiving that one on an annual basis for 4 years. So that gives you a total of about 600,000 and above, slightly above 600,000, meaning then that your total savings is back plus some return. But in this case, we have not assumed you died or you became disabled and you are not able to pay. You are there. You are present to pay and you are present to receive.
Okay, let's go back,
Yes,
Mr. Wenaina. I think kuna watu wamepotea. You said this. I'm born 83, right? I'm the father, and my son is 7 years now.
yes,
Today, my
yes,
budget is 5,000,
yes,
and I'm going to pay this one for a period of 8 years.
yes.
Okay, take it away from there.
Okay. Your contribution will be 5,000 per month for a period of 8 years. Remember, you said the child is 7 years, and the child will go to Form 1
Yes.
at the age of 15. So the difference is 8 years. Now, from the
Yes.
from the year you stop paying, the following year we shall be paying you for 4 years, 153,432 per month. Sorry, not per month, sorry, per year.
Per month.
Yeah, I need to correct myself
year.
there. It is 153,432 per annum. 4 times.
Per annum,
For 4
okay.
years. Yes, amounting to slightly above 614,000 or thereabout. So your total contribution of 480,000 is paid back plus some interest on top.
So at what interest do you charge on this this amount?
When you talk of an education policy, it is not an investment in itself. It is an insurance. Remember, I've just told you about the possibility of us paying for you in case of death or disability. So what happens in this case,
Okay.
the return is based on what we call the mortalities within the pool. Remember, this is a business case, and we are saying that we need to bring like 1,000 people on board for this to make sense. So if very few of the people die and we are not committing to pay the premiums for them, then the return will be better. If many people die, then the return will be low. So it is projected, but we also make sure that we give you a guarantee of some sort because the 153 is guaranteed. Worst case scenario, 153,432.
So do you send that amount on monthly basis, or you have to wait for a period of 1 year for you to send the 153,000?
It is annual, so we shall be paying you for 4 years every year 153,000.
153,000. So and this
Yes.
this father with the budget of 5,000 wants to pay the entire year. Do you have any limitations?
No, there's no limitation. You can pay monthly, quarterly, half yearly, or annual.
Okay.
And if it is half yearly, you just multiply the monthly by 6, and then you get what you need to pay. It will be 5 times 6, 30,000. Yes.
Okay, Mr. Home, do you have any
Yes.
cash value if I decide? Do you have any cash value if I decide to cancel my policy?
Yes. It depends on what year you want to cancel your policy. There is between the first and the second year, I understand with some insurance, there is nothing you're getting if you decide to cancel. The others that are saying they give a 5 years. If you pull out before 5 years are over, you totally lose everything. So it depends on what year do you want to pull out. Is it the first? Is it the 5th year or 6th year? So yes, you'll get something depending on what year you are pulling out.
Mr. Home, want to add something on top of that? Naina.
Yes, okay. I just want to concur with Isaac that most of the companies will give you in education policies a cash value after 2 or 3 years. And it grows as you near maturity. So it is low at the beginning and it increases as you go along. But remember, okay, cash value comes in when you want to cancel the policy. The benefits of the policy are best realized in case you go up to maturity. I would like to request every one of our listeners to make sure that When you start, please make sure you go the full term. Just take something that is manageable on a monthly basis or yearly basis. You can be able to pay. Otherwise, if you take something big to become a student, to force you to cancel the policy in the course of time. Unfortunately, this is an insurance contract, and the company has to recover now it's duty into the contract, because it had promised that in case you die, imagine if somebody dies in 6 months time from the cover starts, we are going to pay for 7.5 years. You also need to bring your goodwill and please push the contract up to maturity.
Mr. Wahome, I just want to know, how are the benefits paid?
Benefits for?
Through each, for any cover.
At
Let's
maturity,
say for this, yes.
There is when we are
Yes,
talking about
maturity.
ordinary life or life insurance, and then there is when we are talking about general insurance. So for life insurance, it's at the maturity stage, or at the stage whereby someone you are claiming because the insured or the person paying the premiums has passed on. It can pay at that stage, or it can pay at maturity, or even also it can also pay at when you're doing a partial maturity or a partial withdrawal. Sorry. So at it can pay at different levels depending on what level you want to be paid. For general insurance, basically it will only pay you at the point whereby you are going to launch a claim. If it's motor insurance, if your car is written off, so at that stage, after the proper procedure has been followed, you'll be paid your claim. If it's medical, it's upon when you're going to the hospital, whether the condition is payable or not. If the condition is payable, yes, at that stage it will be paid. Then it also depends when if it's medical now, when you exhaust your sublimits, there is the overall limit, and then there is sublimits. If you exhaust your sublimits, in that case, you'll find the insurance saying they will only pay up to the maximum sublimit. Then any amount past the sublimit, then the insured person will have to pay for it out of pocket. So it depends at what stage you want. Are you claiming, or are we talking about in terms of being paid?
Mr. Wahome, I just want to ask you, for someone who is in diaspora and they want to have a medical cover, how can they go about it?
Well, the scope of cover, the geography. You need to look at the geography. So if you want to pay for your parents who are here, yes, they'll be covered. But in a case whereby someone who is in diaspora and wants to get covered, will have to look for a cover that it will be able to cover him at that particular country where he's residing, and probably outside when he's visiting Kenya or any other country. So you look at the scope of cover. Is it going to cover my geographical area? So if
I'm outside Kenya, I want to buy a medical cover in Kenya. How do I go about that?
You are in Kenya, you want to buy it here in Kenya?
No, I'm not in Kenya. I'm outside Kenya, and I'm outside Kenya, and I want to have a Kenyan medical cover. Is that possible?
Then
if yes, how do I go about it?
Yes, it's possible. It's possible for you to get insurance outside Kenya. One, you just need to look for a cover that's going to cover you in terms of where you are staying. Is it the cover that will give you coverage in your geographical area where you are residing? So it's possible for you to get a cover. Yes.
Can this be can this be done online?
Yes,
Do you
it
have
can be
any
done
enrollment online?
Yes, you can go to some of these insurance websites and you'll find their application forms and how to go about it. Yes, you can enroll online as long as the some that will ask for medical. I believe if you have to go undergo for medicals, then um, there is that procedure of how the medical results will be analyzed by the insurance for you to be given cover, to be whether they'll do some loading or waiting period or whatever condition you have. If not, they'll just give you cover without conditions.
Thank you very much, Mr. Ohome there. Mr. Wainaina,
Yes.
do these medical covers do cater for funerals?
Yes, there are some medical covers that give you an extra benefit for funeral, just in case you die in the process of getting your treatment. There's some benefit there that you can get for what we call last expense. But even if it is not there, last expense is one of the most cheapest product you can ever buy in the Kenyan market as an insurance product. With as low as 50 shillings per month, in some companies, you can get a very good car for, say, 30,000, 20,000, 50,000, 100,000. Now, depending on your pocket, they are there.
Can we have premiums paid online, Mr. Wainaina?
I don't want to speak for on behalf of the whole of the insurance industry in Kenya, but yes, some you can, some you cannot.
Okay.
Mm.
So what happens to my policy? Let's say, for example, you're working for this old mutual and it changes the ownership. What happens to my policy?
No, in terms of change of ownership, the cover still continues because whoever is buying whichever company will come and the assets and the liabilities and the business. In fact, when you are being bought, it's very possible it's because you are doing well. So they would want to come and continue with the existing policy holder. So the contract indicated you are going for 8 years or 20 years. You still continue with the contract for the remaining term in the new name of that new company.
The contract still remains.
Yes.
Thank you very much, gentlemen. I just want to say thank you very much for making time to. There was one more question here from a friend of mine, and the question was: there has been case where people been losing their lives due to life insurance. Like, do you? I think you answered this question about the premium insurance. If someone loses their life and they have been paying this premium, and what happens if someone dies in between?
Premium insurance is different. Sorry. Continue.
Yes, continue, Isaac. Continue. I'll come to reinforce what you're going to say.
I want to take premium finance is different. Premium finance is just a mode of helping you to pay your premiums, but it's not an insurance. Basically, it's more of it's like a loan you're being given for you to offset your outstanding premiums. It's not an insurance. I think you're trying to ask for in a case where someone has a spouse notices that my husband has this type of cover, and then they plan how to eliminate the other spouse so that they can benefit. That's what you're trying to ask.
Yes.
Wainaina can answer.
It's a very interesting moral ethical question of whether, in case I buy a life cover of 20 million, should my wife know that I have a cover? I think that becomes a very personal decision for you to make because you know how you relate. Okay. And for a fact, yes, we have seen cases where spouses kill each other for you to get the benefit. It is not just something that happens in Kenya. It is worldwide. I've read about so many cases in the first world and beyond. So, well, it is good for you to buy the cover. You buy the cover because you want to say that in case you are not there, then the stream of income dries. You want to create this estate from the life cover that takes care of your children. Okay. At that point, then you may decide whether you are going to tell your spouse that in case one day I don't come back, from that top drawer there, open and you get documents there, they will help you to move on. And then you can keep the key in your pocket. I don't know. But yes, it happens. And it's a regrettable position. But when you look at the percentages, the cases against the policyholders in insurance companies, it's negligible. You can have one case out of, say, like 10,000 policyholders. So it is not a case of concern. But again, if you feel with the money when you have bought the cover, then it's upon you now to do your maths and live a successful life. Thank you.
Thank you very much. Just before we end,
if people have been murdering each other because of insurance, I think the other cases of even people killing each other because of inheritance and property. So it's not only insurance. So yeah.
There was a question for you, Mr. Home, about the personal accident. We wanted to have some brief notes about it, and then we end the show. Yes, go ahead.
Personal accident, the scope of cover is when it gives you coverage in when you get injured out of an accident. It's not a medical cover. It's these are just an insurance cover to cover you when you get an accident. The scope of cover is where it pays out in case of accidental death or permanent total disability. In case of accidental death, it pays the full amount, the full insured amount, and in case of accidental permanent total disability, it also pays the full insured amount, or depending on which part of the body that has been lost. It's on a continental scale. Then there is accidental temporary disablement, where it's only you're being paid for loss of income. So basically, it's a cover to cover you when you are in an accident. So apart from you purchasing your motor insurance, you should also purchase the personal accident cover, which gives you a 24-hour coverage when you are out there. Not only driving, but in case you get injured or even you succumb out from an accident, so your next of kin will be paid.
I just want to add. Yes, on the question of the personal accident, I just want to support Isaac on the scope and context of the cover. Just note it is personal accident. It is accident-based injury or death that will result in the cover paying you. And people should be able to be very careful when you are buying these products. Otherwise, somebody may buy a personal accident and he says that he has a life cover. A personal accident is not a life cover. It is a cover, yes, but for anything that results because of an accident only. Wanted to make clarification.
So, thank you very much, gentlemen. I just want to say thank you very much for making time to our show. Kumekuwa na request wanasema people like to have you on the show again, and we hope you're going to create more time, and this will be specifically on education and health cover. I don't know if you're going to create time for us next week, hopefully.
Yeah, tuko tayari kuitika, lakini it will depend with the schedules also, but tutakubali mwitiko. We'll accept the invite.
Okay,
I agree. Me too.
All right, Mr. Wainaina, your last shot to the diaspora family. What do you want to tell them about the insurance?
I would request them to kindly purchase insurance because it has major benefit in case of the given events or it's something that is extremely important in an age today. But let them come to us. We are going to give them advice. We are going to assess their needs, and we can be able to tailor make the solutions based on the need and maybe what is amount of money that is disposable to be purchased these products. So I just want to encourage them to purchase insurance as much as possible.
As for me, I know where to find you. I know your office. So for those who don't know where to get you, what are your platforms? Are you okay to give your number as well?
I have no problem. I can give my phone number. It is 0722 326 335. That's the main one. Although you can also get me on 0704 100 004.
All right. Thank you very much. And where are you located in Nairobi?
I'm based at the building on Kimathi Street, second floor. Visit anytime, get me or my assistants in the office.
Mr. Wainaina, I know you at a personal level. Nimekataa kuambia watu wewe ndio manager wa All Mutual.
Yes.
At least they know nani tunaongea na yeye. Yes, Mr. Home. Take it away, sir.
Sorry? Hello?
Your
Yes.
last one. Yeah. What do you want to tell the diaspora people?
Diaspora people, it's better to invest now into or put money aside now into taking a cover than being caught without one. So feel free to engage me in case you need a cover and in case you need more about the different types of insurance covers we have.
How do we reach you, sir?
I can give out my email and also I think you can also get me on my personal line.
Yeah, please go ahead.
Which is 0722 424830.
All right. Thank you very much,
That's
gentlemen. And all right. Asante sana. And I hope next week I'll get back to you to Onekama next week. We're going to do this show again. And thank you very much for your time.
Okay.
Thank you very much for your time too.
All right. Thank you very much, gentlemen.
So thank you.
Bye.